Brad, I want to switch gears here and talk about Google with the antitrust case, and we talk about the regulatory concerns just more broadly hanging over the tech sector. I'm curious, just your perspective, how big of a headwind is this a headwind for Google specific, for Alphabet specifically? And I guess more broadly speaking, when you see this type of interaction or I guess movement here from regulators, do you see this being a larger overhang for these stocks going forward?
Certainly it's an overhang for Google. And will probably continue to be for some time, right? The two things going on right now, the biggest one probably is they're trying to, the DOJ is drawing up an outline to propose to the judge in the default search case of how they are going to remedy Google's ability to secure default search status on, smartphones, particularly the iPhone. They have to have that outline to the judge by December, I believe it is, and then the judge is expected to rule on that by next August, right? So that kind of gives you sort of a time frame of that overhang. With that said, I think Google CEO was out a couple nights ago basically saying we're going to appeal this. This is going to take several years. We obviously agree with that assessment, and thus we struggle with it. It means that the business probably fundamentally isn't about to change in sort of like a seismic way, even though these things will remain ongoing. So we actually like Google at these levels just because you've got so many overhangs out there.
Yeah, and Brad, that was really the crux of the question, because I think that when you take a look at Wall Street's reaction, your peers' reaction to this, it's largely been brushed aside. Yes, this is significant, but when you take into account just what it means ultimately to the size of the business, maybe it's not going to have a huge impact then down the line. I'm curious, though, as we broaden out this conversation and you're taking a look at regulatory intervention on a more broad-based scale for some of these tech giants, how much are you factoring that into your models at this point?
Not much, I wouldn't say, at a high level. The reason being is, our kind of holistic view across the space, certainly for the companies we follow, Amazon, Google, and Meta, right, that kind of fall into this category. The businesses are so far down the road, right? The train has so far left the station that unwinding the technology and the intricacy and the complexity of what these companies have built to generate to drive their businesses, I don't know that it's possible to totally unpack that. Certainly, the DOJ is going to do their best to remedy this type of situation in that particular case. But we think about, just as an example, right? Let's talk about Amazon selling first-party versus third-party products, right? So suddenly, are you going to regulate Amazon and not eliminate the ability for other grocers and retailers and large-scale sellers to not sell their own first-party products? Like, that seems pretty unlikely to us, right? So you're creating all sorts of, let's call it unintended byproducts that could have further far-reaching effects on the economy that kind of opens a can of worms that we think the DOJ probably doesn't want to do.
All right, Brad Erickson, thanks so much for breaking that down for us, RBC Capital Markets equity analyst.